I'm University of Illinois Extension's Todd Gleason. This is a FarmDoc webinar today, fertilizer markets, trends, and management decisions for 2026. We're joined by Nick Paulson, Gary Schnitkey, and Henrique Monaco. Thank you all for being with us. They're part of the FarmDoc team and in the Department of Agricultural and Consumer Economics here on campus for the day. Here's our quick topic outline, and I think, Nick, you'll want to go through this because we have a survey that we're going to start with and then a couple of other things.
Yeah, so we're, thanks, Todd, for the intro, as always. Last fall, we did a survey of farmers, utilized our network through FarmDoc and also worked with some other sponsors and partners to get word out about that. So we'll be kind of sprinkling in some results from that survey. The survey focused on fertilizer and a few other input decisions and producers' kind of approach and experiences, as well as some of their perspectives associated with input markets in their local areas. So that information will be kind of, like I said, sprinkled in throughout. We're gonna start with our main content section to just talk about where fertilizer prices are based on the data that we follow, averages that the USDA puts out for the state of Illinois, and talk a little bit about what that might mean for costs in 2026. And then we'll talk about application rates and timing and how those things might be decisions you might want to take a look at, maybe differently than in other kinds of years, given the low prices and the high costs and the tight margins that we're currently dealing with. And then we'll kind of wrap up talking about some industry trends in fertilizer with a focus on nitrogen, but talk about the other macronutrients as well. And so first, just wanted to talk a little bit about the survey, again, that we'll have some results in throughout the presentation. So for this work, we were interested in how farmers make some of their fertilizer decisions. We were kind of more focused on nitrogen than we were for P and K, but we wanted to get some information from farmers, their experience with their local market for fertilizers, the retailers they have access to, how they approach those decisions, and then also some views on industry trends such as consolidation in fertilizer, but also other input markets. This was an online survey we conducted last fall. You may have, if you're on the webinar today, you very well may have been a respondent to this survey. And so we sent that out through our email list and also with some help from some of our sponsors and partners that helped us get the word out and distribute that thing. And we do want to acknowledge that this was research that was supported by the Illinois Corn Marketing Board, so we appreciate that. And Henrique, who's joining us today on the webinar with Gary and I, is one of our excellent grad students who helped us out with that project, analyzing the survey data as well as some of the other things that we put together for some articles that we put out in the last 6 months to a year, as well as some of the slide content that we'll see today. So, just some kind of background demographic information on exactly who filled out that seminar. Got some information here. We did ask folks, how big their operations were in terms of acreage. We did receive about just over 260 complete responses, and these were from crop farmers, or at least those who claim to be crop farmers. And we got responses from 25 states. The majority, not the majority, but most of the responses were from folks in Illinois. And about 2/3 of the responses were within states that we'd consider the Midwest. Most of these farmers are growing corn and soybeans, and then just over 40% also had a livestock enterprise on their operation. If we calculated the average farm size based on the size buckets we offered them when they answered that question, we're probably looking at a farm that's on average in that 1,000 to 2,000 acre range, which matches up with our average farm size based on FBFM farms in Illinois. There were some farms that were on the bigger end, obviously fewer of those than farms in that less than 1,000 or 1,000 to 2,500 acre range. And our sample, based on the responses, were probably a little bit higher owned acreage rates than we see with the commercial grain farms in our FBFM association. I think that is actually closer to what we see on broader averages reported by the USDA in terms of the percent of owned acres. So again, a little demographic info there on the survey. Gary?
Yeah, just one note here. This is probably the first time we have an indication of how much variable cash rent are used on farms that are from farmers themselves there, and you see that share rent acres and fixed cash rent acres are about equal at 20%, and the variable cash rent acres are at 14%, and that has grown over time. So,
yeah, and we get numbers on that every year from some of the Illinois Society professional farm managers survey work that's done. But yeah, you're right. These are maybe the first time we're seeing some direct farmer survey numbers that we've collected to give an indication of how common those variable cash rent agreements are.
Yep.
All right. So with that, we're going to move into our fertilizer prices and costs. And we want to start off with a poll here. And we're curious what the folks' feelings are on what your fertilizer costs might end up being for the 2026 crop year compared to what you might have paid this year. So
go ahead and take some time and fill that out, and I'll remind you who our sponsors are for today as well. How about that? As you're filling out whether you think fertilizer costs will be lower, about the same, higher, or haven't thought about it at all. Wondering whether how many have gotten that. TIA Center for Farmland Research, of course, is one of our sponsors, along with CoBank, Compeer Financial, Farm Credit Illinois, FS Growmark, the Illinois Corn Growers Association, the Illinois Soybean Association, and John Deere. We thank them for their sponsorships, not only for the webinars, but of course for the whole of the FarmDoc website. You can find more information on them at farmdocdaily.illinois.edu. Jim Baltz, have we got enough to get the numbers done and in the poll? Yes, about half of you have put your votes in. We're going to go with that. And here they are. 0% think they will be lower. That's interesting. About the same, 18%. 73% of you think they will be higher than they were from last year. And 9% haven't really thought about it at this point. I don't know. Is that what you're expected to see?
I think that's what I would have expected to see. It's what I've heard anecdotally from farmers about those who have looked into some pricing for 2026 procurement. And I think it's consistent with our crop budgets we put out in August, so that's good. We'll see some of those numbers here coming up in a second. We're going to run through the data that we track, at least, and include in our articles from time to time. I think one of the better indicators that we have in terms of tracking fertilizer prices that Illinois farmers are paying. So what we're going to look at here, you'll see in the bottom that this is coming from the USDA Ag Marketing Service. This is part of a biweekly, every 2 weeks crop production report that they put out for Illinois. Other states have these as well. But for the Illinois report, these are supposed to be prices quoted from retailers that the USDA folks reach out to. And they report a high price, a low price, and then we tend to look at the midpoint of that range as a measure of what the average price across the state of Illinois might be for that 2 week period. And so if we look at some of the nitrogen products that are included in that survey, we've got anhydrous, urea, and 28% liquid here. And I think the trend that we've seen, at least in the 2025 calendar year, is prices have been kind of creeping back up since the start of the year. Obviously, we'll see this in the phosphorus and potassium or potash prices coming up here as well. But we had big spikes in our fertilizer prices into 2022, and then some declining prices at the end of 2022 into 2023. But those prices have remained higher, come down, but remained higher than what we would view as maybe longer term recent historical averages prior to that 2021, 2022 run up. Had some stability kind of throughout 2024, even some declines in some of these nitrogen products, but again, they have crept up here throughout the first 3 quarters or 9 months of 2025.
Yeah, and again, they have come down from 2022 highs, and now we're looking at $780 to $800 as reported by the AMS. I've heard of some individual farmers getting bids sort of in the 730 to 740 range. Both of those would be higher than last year. And again, if you go back and compare those anhydrous ammonia prices to what they were in 2017 through 2020, they still are higher than back then. And we have roughly the same corn price, maybe a little bit higher, but roughly the same. So you're going to see that cause a tilting away from corn profitability. Just that nitrogen price and that level is the main driver between corn and soybean profitability, or changes in it over time in Illinois and the Midwest.
I have a question on this because the price of N tends to track so closely with the price of corn. Does it track not daily but weekly with it, relatively speaking? So we've had a rally of 45 or 50 cents since the lows.
So it follows the corn price rather closely. I don't know if we can get down to that precision, but the period we have here is a 2-week period. When we do our analysis, we put that in a monthly period just to match all the data. So, but yeah, you are right that corn prices are the main determinant of it. I would note that if you use that as an indicator, then we should be heading back sort of the 2018 to 2020 levels. But our statistical results wouldn't say that's going to happen.
And natural gas would be the other big driver too. Right. We've estimated that relationship, and I think prices aren't considerably out of line where that historical statistical relationship would suggest they be, given where natural gas and corn is at. Probably a bit of a premium relative to prices we saw though when corn was where it's at now, as Gary said, back more in like the 2020, 2019 period. And I think natural gas prices, I haven't looked at them for a couple of weeks, but they've been kind of around those 2019, 2020 levels, more so than some of the highs we saw in that 2022 period. So that's our nitrogen prices. Again, those are prices reported by USDA. Every time we show these or talk about these, we get people who say that's not right. And it's probably not right for your individual situation, but these are averages across a number of observations across the state. We also track, or they also track in that report, DAP and MAP prices. So your kind of primary phosphorus products here. And similar movements here, the spikes in mid 2022 come down since then, fairly stable throughout 2024, and have been kind of creeping up here through the first 8.5, 9 months of 2025.
Creeping up pretty substantially. Actually.
Yeah, in the case of DAP, we've seen a pretty significant increase from kind of the low $800 range to the high $800 range just in this calendar year. And then lastly, we've got our potash series that's also provided in that report. So here's our potassium measure. Currently in that high $400 range. Again, similar pattern as the other products. Down off the peaks reached in mid to late 2022. Actually saw potash prices take a jump down in the middle of last year, but have been working their way back up from that mid $400 range to the high $400 range here in 2025. So again, consistent with the survey or the poll responses, people thinking fertilizer costs will be higher this year than last year. Consistent with the average price series here that we're tracking for those macro nutrient products here from the USDA. Next up, we've got our production cost series. If you follow FarmDoc in any way, you've probably seen this used in webinars or articles a number of times, but we've got the non-land costs here in orange. That includes direct cost category with inputs, power and machinery category, and then overhead costs. This is for the 50-50 rotation, and then we stack our measure of land costs, average cash rent for the region on top of that. Again, the story here is we are seeing production costs coming down from the highs that we reached in 2023, over $1,050 all in on rented ground in the average situation in central Illinois in 2023, down both in terms of land costs from rental rate reductions and also reductions in that non-land cost series. And most of that decline, that 50 or so odd dollar decline that we're projecting relative to those 2023 highs for next year, for those non-land costs, really is driven by lower fertilizer prices, particularly for corn.
Yep. And that's what drives the downward movement and now the upward movement in those prices. So this shows what we're projecting for corn prices: $229 per acre. This would be for central Illinois high productivity farmland. So again, inching up going up from 24 and 25 levels. Again, looking simply at those price increases that we're observing. Here it is for soybeans. Soybeans, actually, we're coming down a bit for soybeans. Some soybean budgets, we use more potash, and actually, even given our potash tariff concerns, they're the one price that hasn't. DAP and anhydrous ammonia, we see that in our price series. Potash is pretty stable there. So again, if you're looking at these price series, $61 in 2026, and obviously we were high in 2022 and 2023, and then you sort of go back to 2012, 2013, and 2014. So
yep. So again, that's kind of where we're at on pricing and where we think costs per acre are going to be heading into next year. Now we'll start looking at some of the results from the survey that we mentioned. So one of the sections of questions we asked farmers in that survey were, what were some of the pricing strategies that they used for their fertilizer products? And the options we gave them include forward purchases or pre-booking, volume discounts, bundling, timing adjustments to control costs, and then a more general other category, recognizing that there's probably other things folks do that we couldn't include in every option in the survey. And by far, the forward purchases and pre-booking was the most common strategy used for pricing, volume discounts being second. And then this was a question where you could select multiple options, and most farmers, over 60%, did make multiple selections here, and the most common combo was those two most popular strategies there. So the use of both forward purchases and volume discounts was kind of the most common way to combine some of these strategies as well.
And again, a note, we're probably getting to the point where many farmers are going to apply a lot of the DAP and potash or the dry fertilizers, and then what we are. And on the other side of the forward purchases, we do observe or have observed, and this will be interesting to see this year. Many farmers also forward price many of their inputs in the spring. A lot of that is to gain volume discounts, but also timing discounts, and also to reduce taxes. And that might become less of a strategy this year as we have lower incomes. So we'll see where all that goes. One note on incomes: remember, those ECAT payments will be on a receivable or a taxable income this year. So even though we might be looking at lower income from grain operations, take that into consideration and do some tax planning, I suppose, in November and December.
Yeah, and then the next thing we wanted to share was some of the results related to just how many retailers most farmers tend to work with in their local area. And so we asked, there's 3 questions actually summarized here. We were interested in how many retailers, how many options do you have in your area? How many are you aware of in your area? That's the bars in light blue. How many do you actually solicit quotes from or get pricing information from or inquire with about pricing? And then finally in green, how many do you actually pull the trigger and make purchases from? And again, I think these results, I don't know if that necessarily say what we were expecting, but I think they make a lot of sense. In general, we see there's probably more options within the area than you might solicit price quotes from, and you probably solicit quotes from more people than you actually make purchases through. And so, quite a few actually are only actually purchasing from just one or one or two, whereas most people have 3 or 4 in their area and might get information from 2 or 3 retailers.
Yeah, I would note that we sort of also asked were they concerned about consolidation, and we sort of broke that out between fertilizer manufacturer consolidation and retailer consolidation. And the retail consolidation was a big deal for farmers. So in almost they were more concerned with retail consolidation than the fertilizer manufacturers. I would also note we probably in Illinois have more fertilizer retailers than a lot of areas in the world that are outside the prime of the Corn Belt.
Yep. All right, and then again, another question we asked. We provided some statements and asked if you agree or disagree with these things, and allowed people to pick from a range here of strongly disagree all the way to strongly agree. And this sort of summarizes the results from the questions related to retailer numbers and how that impacts pricing and service that you receive. And so asked a question about doing business with only one retailer and how that impacts service or pricing. Tend to be more in agreement that going with one retailer might improve service, but pricing, whether that improves pricing and only going with that one retailer, a little bit more mixed there, slightly more agree than disagree. And then another question here on, what would be the impact of having more retailers? Would that be a positive or a negative in terms of impacts on service and prices? The majority here in both cases, more so on the price side, agree or strongly agree that more retailers would improve service and improve prices relative to the small share that disagree with that. And that would make sense from an economic standpoint in terms of the competition it could create in the area. All right, so some takeaways from this first section. Again, fertilizer prices have come down from their peaks. That's true whether we're talking about nitrogen, phosphorus, or potassium products, but they remain high relative to our crop prices, high relative to where they were the last time we saw crop prices at this level. One of the big contributors here to some of the margin challenges we're facing right now. And then again, advice or on the ground experience with how folks approach the pricing and purchase decisions. Forward purchases and volume discounts are the most common. And we'd emphasize, the importance of getting quotes from multiple retailers and at least some of the bargaining power and negotiating power that might give you relative to only working with one retailer. Even if you go ahead and make all your purchases with one, make sure you're checking around options in the area just to make sure that you're not missing out on some opportunities.
Yep. Yep.
All right, so now we're going to move on to talking about application rates and timing decisions. And we've got another poll question here, and I'll let Todd talk to you a little bit on that.
Sure. So here's the question. What information do you use to determine your nitrogen application rate? You check all that apply. You check the University of Illinois Extension, or the MRTN, also known as the nitrogen rate calculator that you can find online. You use soil tests, retailer recommendations, independent advisor or agronomist you might consult, and you might consider fertilizer and corn prices. So check all of them that you use, and we'll get some answers to those in just a bit. Again, your watching and listening to a FarmDoc Daily webinar. You can always go visit our website at farmdocdaily.illinois.edu and find more information on fertilizer and all kinds of other agricultural and agronomic information whenever you would like. Let's go ahead, and I think we've got to the point where we can end the poll, and we'll show you the results momentarily. There they are. 27% say they use the MRTN. That's the nitrogen rate calculator online. By the way, if you don't know how to get to that, just tap in rate calculator into your web browser, and it should be the first thing that comes up. 38% say they use soil test. Retailer recommendations are a large 46% of what folks use. Independent agronomist advisors, 38%, and fertilizer and corn prices at 50%. So 50% use the fertilizer and corn price to decide what they're going to use as their nitrogen rate calculator, as their nitrogen rate. That actually, last one surprises me, that they think very much about how the price influences their nitrogen rate application. I was working under the assumption that they mostly did this year what they did last year, and last year what they did the year before.
Well, I think the poll is, again, very consistent with what we found when we asked a very similar question in the survey. So these are good validation exercises here. So again, I don't know if we are necessarily surprised by this at all, but so on the left, what we're showing is we asked the farmers how many sources of information. Again, a question. Select all that apply. What sources of information do you use to make your application rate decisions? And most farmers use multiple sources. In many cases, 3, 4, or even 5 or 6 sources. And that's what the bar graphs on the left there indicate. And then on the right, it kind of breaks it out. So if you're a farmer that kind of only considers 1 or 2 pieces of information, that's the breakdown there in the far left of that right panel, versus all the way to the right, we've got how that's sort of broken out across the options for farmers who use 5 or even 6 sources of information. And it's kind of mixed, and I think the percentages here match up pretty well with what we saw in the poll here. Particularly as more information sources get used, it's fairly evenly distributed across those. Fertilizer and corn prices probably are the majority, and then or the largest percentage. We probably like to see those extension sources utilized a little bit more, but maybe Gary and I are biased a bit on that.
The thing about the extension source is it actually takes into account the price per pound of nitrogen when you put it in. It's part of the calculation. So when it's doing that, it's actually taking price into account for both corn and the fertilizer.
Yeah, and it's that relative price that really matters. So, if prices for both are high, it might still be a high rate that's justified economically. If fertilizer is high and corn is low, like we have right now, then it's going to probably advise you to back off a little bit. And we actually have some examples here on the next slide based on that MRTN. And so, Todd mentioned the MRTN calculator is easy to find. You type in MRTN calculator, nitrogen rate calculator. It'll be almost certainly the first hit on Google if you search that there. That's also a hyperlink here in the slide that should work if you download the handouts, and that screenshot there is what that will take you to. And just kind of using current price levels, the MRTN rates will vary based on the fertilizer price that you enter and the corn price that you enter. So, if we're in a $4 corn price kind of area, currently $790 per ton anhydrous, which is again the latest average in that USDA survey for Illinois, that's going to give you a 20-pound lower MRTN rate suggestion than if anhydrous was $500 a ton, which is kind of where it was at the last time we were in that $4 corn price. So, that's a 20% reduction, not insignificant, and a way to maybe save some dollars. And the key point here is that, we're not trying to maximize yield here in this MRTN. The concept is to maximize profitability. And when corn is worth less relative to what that fertilizer costs, you're not necessarily maximizing yield here. or you're not maximizing profits at your maximum yield. It might be a lower number.
Yeah, one of the things we did observe in PCM data was that in 2022, which had very high corn prices or higher corn prices and high nitrogen prices, we actually did see the N rates go up that year. Another thing I would note is that 180 versus 199, we see about 60% of the farms, 65% of the farms above those MRTN rates. Being above it, again, you may get a bit higher yields with a higher application rates, but the MRTN is a profitability measure, so you're taking into consideration the cost of those higher amounts of nutrients. I would also say that in a low price year, high nitrogen price like we are in now, 4 versus 790, the profit reduction from applying higher rates is going to become larger because you get less revenue from that bushel and more cost from them from the higher end application rates. The MRTN does take into consideration, or should take into consideration, the end credit from the DAP and MAP credits.
It does.
And surveys suggest most farmers do, but we should. And then we'll get more into this one on the next slide. So
yeah, I will say that it does take it into account, but you have to subtract it off yourself. It says it gives you a total number of N pounds that you're supposed to apply, and then you have to subtract off the N that you actually already have applied to get to the application rate, particularly for anhydrous ammonia. One other note, if you go back, and it's not very far back in the FarmDoc webinar series, you can find all that stuff on our website. We'll tell you more about how to do that. But there is a PCM nitrogen fertilizer from just a few weeks ago that you can go back and check. And I know we've been working through IFAS, the Illinois Farm Economics Summits, and the Farm Assets Conference, which are coming up in December. And for Farm Assets, on the 12th of February, you, Laura Gentry from PCM, and John Jones, who is the fertility specialist here on campus, soil fertility, that is, will be talking about these issues. So watch FarmDoc daily for the announcements of when our winter meetings are taking place. They start the 12th of February and run the following week.
12th of December.
Oh, yeah, 12th of December. Thank you very much. February would be.
You show up on February 12th, you will have missed us. Yeah, and then I think Gary was going to provide a little more detail here on the potassium and phosphorus and potassium soil test comment here. Again, we got the link to the Illinois Agronomy Handbook, which is what the information on the next slide is based off of. We did want to remind people about these. We've tried to remind people about these multiple times in the last few years when we're talking about this, but this was updated in 2021, and these maintenance rates or removal rates were lowered relative to what you might still be using.
Yep. And what these removal rates are based on is the amount of phosphorus and potassium taken off per bushel of corn and soybeans. So it's strictly looking at the removal from the grains that are taken off the fields, and that would largely be saying that those removal, or the amount of nutrient in those bushels, have been going down over time, because it simply is a measure of what's being taken off in the bushels. We also, and there's another article that's listed that also does a nice job of summarizing this. It's from the Bulletin, which is actually in the same place as the FarmDoc Daily is, and it was entitled "Fertilizer with High Prices of P and K." And just a note from that article, we talk about the removal rates. The other thing that we probably should give more attention to is the soil test levels, and this article, and this isn't new either, is there's no yield advantage when Bray P1 levels are above 60, 65, and 70. I would note that on many farms, it appears to be the standard practice to put on P and K, even if those Bray P1 levels are above that, and similarly with K 360 to 400. And again, go to the article and look at that. But if you're above those levels, there isn't any yield advantage, and there would be a case for mining the soil, I suppose, because no one's getting an advantage from that. I would note that if you buy a farm and you do a soil test and you have soil test above those levels, many tax practitioners are now calculating the value of being above it and then depreciating that down. And so far, that has not been challenged by IRS. But the idea is that you have a usable asset there, and the idea from the tax standpoint is to get the farm price away from just the farmland to a usable, depreciable asset, and that being the Bray P1. So anyway, even the IRS recognizes that having levels above that are high. I sense a reluctance amongst some farmers of doing that, but again, there isn't a yield advantage, and so
Another case where science pays.
Yeah.
All right, we're going to shift to talk for a few minutes now on some timing decisions. Again, some survey information here. We were interested in what factors impact timing decisions. Again, this is specifically talking about nitrogen applications. And I think good to see that nutrient losses were the #1 ranked factor here. So a couple of measures that kind of indicate the direction the survey responses went. On the right, we've got kind of the averages across these categories on this 5-point scale. So we asked people to rate these factors, whether they were ranging from a 1, which is not important at all the way to a 5, which is extremely important. And so, nutrient losses did have the highest average. Statistically, we probably can't tell that there's a huge difference between any of these things based on those averages at the right end of those bars. But that ranking there does also agree with, if we just focus on how many of the farmers that responded, categorize these things as 4s or 5s, which are very or extremely important. And that's the percentages that you see there on the left. So, basically 2/3 of farmers, would say that nutrient loss is very important or extremely important in their timing decisions. Fertilizer prices and spring weather and planting conditions are all at or above 50% in terms of being very important or extremely important. Fall conditions, a little bit less so in terms of weather and harvest. And then we had that supply availability one in there that again, all these things were important, but maybe less so than spring conditions, prices, and nutrient losses. All right, so on application timing, I'll let Gary add to this as well, but we do realize that there's trade-offs here. Spring applications have been shown to at least have the potential and in practice can reduce nutrient losses. You can maybe, even end up applying less because you're going to be more sure about what's actually going to stick around and be available to the crop. But there's also some flexibility lost. I know growing up in southern Minnesota, we don't always have the same spring windows you have even here in Illinois, which is, even quite a bit further south than I even realized when I was in Minnesota. And so those fall application windows, if you got the time to get it on in the fall, that's one less thing to worry about in the spring. But those are associated with the greatest potential for losses.
Yeah, and I would also mention that most farmers also put a stabilizer on in the fall, which is $14 to $15 per acre or something in that range. Should be taken into consideration when you do look at those costs, and that $14 does add up and sometimes makes that fall application more costly than some other times. And if you want to have the least cost application, put anhydrous ammonia on after planting. So
All right. Well, we're now going to move on now to our industry trends section. And Enrique has been quiet, but we're going to let him talk a little bit here on some of this information.
Sounds good, Nick. Thanks. We talked about prices, application rates, and the survey, and we thought it would be a good idea to just step back a little bit and talk about the fundamentals, how those prices or how the fertilizer industry here fundamentals have been historically. First here, what we have we have the U.S. consumption of the major nutrients here for fertilizer. Before talking about this chart specifically, I do want to point that the global consumption and production for fertilizer has been growing. That's primarily driven by China, Brazil, India, as well, in addition to the US. Now, when you look at the US here, nitrogen and potassium consumption have been relatively stable in the last 25 years or so, whereas phosphorus here has been decreasing. It is important to say that for nitrogen, roughly 90% of nitrogen consumption as far as fertilizer in the US, you can just wait a little bit, just the consumption side, it's heavily, 90% is done in corn and wheat acres. So that's where we get most of that consumption, and there's not a lot of land available, I guess, to be converted into cropland. So most of that consumption that we might see increasing or not going forward will probably come from any like substitution between corn and soybean and other less nitrogen utilizing crops. Okay, now we can shift to production, and the production side here of those three nutrients, it's a bit different than consumption. We do see nitrogen production in the US growing over time, especially after 2010. Phosphorus consumption is also trending down with, production is also trending down with consumption, and potassium as well trending down. Now, when you think about where the nutrients coming from, if you are consuming that, it's either being produced or imported, right? So that big shift from 2010 through 2024 in nitrogen production really decreased the nitrogen, what we call net import reliance for the US. So basically what this chart says is when you adjust for exports and stocks here, what percentage of consumption is being met through imports. So as we can see here, potassium has always been high, but it's increasing even more. And for potassium here, we do US imports roughly 94% of consumption. If I'm not mistaken, that's primarily Canada. But for nitrogen, that production, that import reliance went from roughly 40% down all the way to 6%. That doesn't mean that imports are not an important factor yet on determining prices, because it's always at the margin that there is still need imports to meet its consumption, so it is still important to determine prices. Phosphorus, now the import reliance has been increasing over time, and but it's still relatively low when you compare that to potassium. But again, it's imports matter for prices as well. Okay, it's not because it's a 13% reliance only that if something would have happened with Peru, which is the highest or the main U.S. partner for phosphorus, if something would have happened with that imports, of course, that would have a big impact on prices. Now, for nitrogen, I just want to point out that Trinidad and Tobago and Canada are the main partners, and for potash, Canada and Russia. Now, keep going here, talking a little bit on the consumption side. As we saw, the nitrogen consumption and potassium are relatively stable. Again, land use or cropland is relatively stable, but we do have substitution between those crops that might affect consumption. But the other piece here that will affect consumption is, or that has been, I guess, good news here for the U.S. in terms of fertilizer efficiency of use, is that for nitrogen, both for corn, soybeans, and wheat, the fertilizer use efficiency has been trending down. So what that means is, so what this chart shows here is how many pounds of fertilizer are being used to produce 1 bushel. And of course, for nitrogen, since we saw that consumption relatively stable, this is primarily driven by an increase in yields, right? Any increase in yields will improve fertilizer use efficiency. And that's what we are seeing here for all 3 major crops, which is a good sign. And that will also impact consumption. Although I think consumption will still be there, it's just more bushels being produced with the same amount. Now, for phosphorus, same picture pretty much. Of course, different values, but we do see the use of phosphorus per bushel produced trending down for soybeans, wheat, and corn, meaning that farmers are being more efficient in using phosphorus to produce soybeans, wheat, and corn. For phosphorus, the main crops that use phosphorus, at least historically, we do see corn still using roughly 50%, and soybeans and wheat roughly the other 40% of phosphorus. And lastly, we can also talk about potassium. Again, a very similar trend. Soybeans maybe trending or improving efficiency at a faster pace here. But for potassium, corn and soybeans are the major crops that utilize this nutrient in the last 20, 25 years. And we are also seeing increase in fertilizer use efficiency for potassium. So this is a little bit of the fundamentals here. And now we're going to talk a little bit about trends in the domestic industry consolidation. I think this is important to discuss, and we're going to link that also to some results of the survey. But we're going to focus primarily here on nitrogen. And in terms of capacity, so production capacity is the chart, what you see here on the left axis. We do see this capacity high up, then trending down all the way to 2006 through 2014, and then increasing again since. And we did see that the US production of nitrogen has been increasing, and that matches that period as well. During the same period, we also see some increase in concentration as far as production capacity of nitrogen. So where we look at the right axis, this is the share of the top 4 companies. So when you look at 1994, for instance, the top 4 companies in the nitrogen market had the capacity to produce roughly 50% of the US capacity. Whereas when you go all the way now to 2022, this number is little over 70%. So there has been some consolidation in the sector. And specifically for nitrogen, you can look at the next slide. We'll see that roughly 70% then of the production is concentrated on 4 companies, and 90% of the total US capacity is concentrated on 9 companies. So it is a consolidated sector. This is, I don't think this is news, like new for anyone. It does happen in other sectors as well, but it's trending. I don't want to say right and wrong, but it is consolidating over time, not only in terms of companies, but also in terms of number of plants that are out there producing nitrogen. Okay, so we see here that CF Nutrien potash, and LSB industries represent roughly 70% of that production capacity that the U.S. has. This is 2024 or 5 data. And that's important, and we are talking about that, one, to look at the fundamentals behind fertilizer industry, but also as part of the survey, one of the questions was related to the concentration impact or the farmer sentiment on consolidation, specifically here in the nitrogen industry. So, Nick, do you want to wrap this up, or?
Yeah, sure. So the consolidation questions we asked, we included, again, the survey was focused on fertilizers, but we wanted to also share some of the other input markets we included here. We kind of wanted to get people's sense of concern or their opinions on the impacts on both pricing, and then the next slide we'll shift to what the survey said with respect to customer service quality. But in terms of prices, whether we're talking about consolidation in seed, machinery, crop protection, or fertilizers, we see some pretty similar results here. And also pretty similar whether we're talking about sort of the manufacturing side of any one of those individual industries, or the wholesale side versus the retail side. And so again, majority of respondents here would say that they'd expect consolidation that has occurred or continuing consolidation that's ongoing to increase the prices that they pay for products, whether we're talking about seed, machinery, crop protection products, or fertilizers. And a small percentage would say that consolidation could actually lead to lower prices. So I would say this would be viewed as kind of a negative thing. More consolidation would tend to lead to higher price expectations. On the customer service side, it's a little bit more mixed, but again, generally kind of a negative outcome here. So whether we're talking about seed, machinery, crop protection, or fertilizers, we'd see the more respondents would expect a reduction in the quality of customer service relative to improvements or increases in that service. And as Gary kind of mentioned here, particularly maybe a little bit of more concern or more of an expectation on service being lower on the retail side, which I think makes sense, since that's who the farmer's probably more than likely working directly with, rather than the wholesale side of these industries. All right, so we'll wrap up here with some summary points. Again, started off talking about prices and what that means in cost per acre. Our fertilizer prices do remain high, and they are a major factor contributing to some of the poor returns, particularly on corn with nitrogen use there. These are not new pieces of advice or suggestions, but again, these are the sorts of economic conditions where these are the most important things to spend some time and take a look at. And so reconsider your application rates, take a look at that MRTN calculator, compare it to what you have been doing. What we see in the data is that there are more farms, more situations than not that probably could reduce that rate closer to that MRTN and probably see an improvement in profits. Again, we are trying to maximize profit per acre here, not necessarily yield, and those aren't necessarily going to be the same things. Again, the P&K replacement rates, and just want to raise awareness that those were revised down in 2021. Those were agronomic science-based revisions to those things, and to combine that with soil testing to try to be as efficient as possible with your P&K as well. And then we talked a little bit about the timing shifts that can reduce nutrient losses, but we also understand that there's some flexibilities and costs that have to be considered in those things as well. Again, global fertilizer use continues to grow, but at least in the US, we see pretty stable total N and K use, and even a decline in the amount of phosphorus that's applied. That all those factors point to improved efficiency, particularly in the US, as we're getting more bushels per pound of these nutrients that we're applying. And then again, with everything going on in the trade space, especially right now, it is good to be aware of import reliance, in the US, and that being the greatest for our potassium products, with most of our potash coming from Canada. Smaller reliance for phosphorus and nitrogen, but still not insignificant there in terms of what we rely on for imports. And so with that, I'm going to let and then we talked about consolidation and fertilizers, and sort of that being a concern. And with that, I'm going to turn it over to Todd to talk about our sponsors, and we'll answer some questions.
You bet. So if you do have a question, go ahead and put that in the box now. Hopefully before I get done with my little discussion here, we'll see some of those. There is a question that we have had that was dropped in. Somebody wanted to know, when is the most optimal time to apply nitrogen for the greatest benefit to the plant? We agree that the agronomist should probably answer that question. That would be John Jones here on campus, along with Giovanni Prezafontes. However, what we do know is that as long as it is available to the plant, it doesn't really matter when the optimal time might be. It doesn't change very much. John and Giovanni probably have more to say about that, I'm sure, so you want to check in with them. And John will join us again at Farm Assets Conference, so you can check that out.
Asset Conference. So yeah, he will be there to answer that. So he's relatively new here on campus, and very well.
Yeah,
very good.
So we'll be looking forward to that. Farm Assets Conference is coming up December the 12th. We have not put that information up yet, and the Illinois Farm Economics Summit covers the following week on, I want to say, the 16th, 17th, and 18th, but whatever that Monday, Tuesday, and Wednesday is in Mount Vernon, along with DeKalb and in Peoria. Our sponsors here are TI Center for Farmland Research, CoBank, Compare, Farm Credit Illinois, the Illinois Corn Growers Association, John Deere, the Illinois Soybean Association, and GrowMark. Our educational partners include the College of Agricultural, Consumer, and Environmental Sciences, the Department of Agricultural and Consumer Economics, Illinois Extension, FBFM, and the Gardner Agricultural Policy Program. On behalf of Jim Baltz, who's behind the scenes, thank you much, Jim, for being with us, making sure that everything runs smoothly, along with Henrique Monaco, Nick Paulson, and Gary Schnitkey. We all wish you a very good day. I'm University of Illinois Extension's Todd Gleason.